Welcome to SeerCast, where founders and CEOs from the banking, payments, and fintech industry share their knowledge and expertise on solving real world problems. You'll receive tips and techniques on various topics that you can use right away, such as growing a startup, finding funding, bank fintech relationships, change in regulations, and so much more. I'm Adwait Joshi, and I'm founder and chief seer at Data Seers. So let's get started. I would like to welcome John McNair, President and CEO of the CBA of Georgia, which is the Community Bankers Association of Georgia. John, welcome to SeerCast.
Thank you very much for having me. It's an honor. I appreciate it.
Honor is ours. You recently won the Titan 100 for a second year in a row. What an amazing achievement. We are so proud of you, and you're doing some amazing work here in Georgia for all the bankers. So why don't we start with that? I'm pretty sure our audience wants to know, what does CBA do and what do you do specifically for CBA?
Yeah, well, thank you. Well, first of all, nothing's possible without my team. I have an amazing group of people here at the association that do a variety of different things. We have an individual who's been recognized as one of Georgia's top lobbyists for several years in a row, and really one of the best professional development educators in the entire country. And you all work with Lindsay Green. You know how fantastic she is too. So I've got a great team here at CBA, and really the core mission of the association, Adway, we were founded 55 years ago to be the voice of Georgia's community banking industry, both in the state house and then also on a grassroots level with regard to our federal legislators. So really, what we do is advocate for the community banking industry. In our membership, we only have community banks in the association. We do not have your big box institutions, Wells Fargo, J.P. Morgan, et cetera. They do their own things, their own institutions, et cetera. So if you think in terms of Wall Street versus Main Street, we are Main Street. So that was our core purpose of of when we were founded 55 years ago. We really evolved into quite expansive organization. There is a massive need for a compliance and regulatory training in our businesses, as I'm sure you're well aware. Banks are very heavily regulated, and those regulations and rules are changing all the time, especially when there's generational legislation that gets passed, such as the Dodd-Frank legislation. I mean, they're still writing the rules from that bill, which was passed in 2009, 2010. So we do a ton of education training for our members in compliance and regulatory in the regulatory space, but then also try to train them up on the things they need to run their businesses today. As you well know, this is how we came in contact. We're very heavily involved in the technology scene in Georgia. Um,
Mhm.
and so we're bringing a lot of technology training to our bankers in conjunction with the Independent Community Bankers of America, which is our national community bank trade organization. So education is a massive part of what we do. And then our services group, we endeavor to find best in class providers in a variety of service areas to bring to the table for our institutions, technology companies, insurance companies, companies that can help with commercial loans, residential loans, et cetera. So that's kind of what we do in a nutshell. In my role as president and CEO, I'm kind of overseeing all of that, right? So I've got to be a little bit, actually more than a little bit up to speed on what's happening in the State House. Right now, our General Assembly is in session. We have a 40-day session here in Georgia. Our legislators are citizen legislators, so they do their thing for 40 business days and go home. We just had crossover day yesterday, so we're in the second half of the session. So I'm down. One of the reasons why I'm wearing the tie is I'm down at the Capitol a little bit every now and then. And then I plug into our professional development curriculum quite a bit. And then I work very closely with all of our partner firms to align them with our bankers as well. So it's kind of a multifaceted role, and I maintain the relationship with ICBA on a federal level as well. So that's kind of it in a nutshell. It's never boring.
John, you told us a little bit about CBA and what the organization does, but tell us about your story. How did you come along becoming the president and CEO of CBA. What were you doing before? And obviously, we all say that the CEO job is actually the hardest job. A lot of people fail at it. You have done an amazing role here. The local bankers and the whole group here trusts you. So tell us a little bit about how did the journey begin, and where is it going? Where is it headed?
Well, absolutely. I've been in and around the banking industry my entire career. When I graduated college, I was a Harlan guy. I started with Harlan, which is now Vericast, and they have turned into a technology-based company as well. Um, so my wife and I owned our own business. We actually sold business forms to small business customers of community banks. So again, I've had a referral relationship with community banks. I've done real estate appraisal work, so I understand what commercial lenders are looking at when they're looking at a real estate deal. And then prior to coming here in CBA in October of 18, I spent 14 years on a federal level with the Independent Community Bankers of America. So I ran their, I finished as an executive vice president, responsible for member relations nationwide. So I had the great privilege of leading an unbelievable team of field of customer facing individuals that covered the country. So I've literally been in hundreds of community banks in all different parts of the country: the Midwest, the West Coast, the Northeast, the Southeast, et cetera. So I've really, over the past now almost 20 years, I've been directly involved in the community bank association industry, and so I've really gotten to know a lot of people across the country, and have been very much involved in learning about their businesses, their markets, et cetera, and try to be a provider of resources. I mean, that's really my main role here as well. If you think about it, is if a legislator calls me and they're looking for information, I try to provide resources to them. If my team needs some counsel, some advice, we need a new a piece of technology, we're looking at a new partner forum, I try to provide those resources as well. So that's kind of how I got here. A little bit of on a personal note as well. When it came time for my daughter to go to college back in 2013, 2014, we lived about an hour and a half away from Penn State. I lived in central
Hmm.
Pennsylvania, and she really wanted to go to school in the South, and so she applied to University of Georgia, got in, went
Go dogs.
Go Dogs. Yep. Graduated in December of 2017, 3.5 years with a finance degree, and got a job right downtown working with Ernst& Young doing valuation work. And so my wife and I just have one little girl who's not so little anymore. And so when I got the phone call to come to Georgia, it was serendipity.
Hmm.
We were still living in the Northeast, so it was a great opportunity for us to be together again as a family. Although we never see each other because she's working a lot, my wife and I are working a lot, but it's just nice to know she's 30 minutes away.
Yeah, I mean, what a story. We love Georgia. We love Atlanta. I'm on the board of FinTech Atlanta. I'm always happy to see that the university system of Georgia, which Tommy Marshall used to be involved, and now Laura is involved with, is the goal is the same, right? Its goal is to create enough talent in Georgia that these Georgia organizations need and Atlanta needs, which we have to go outside, right? And so bolstering our entire ecosystem for education to create more fintech and banking related talent. So I'm super happy. Like we are local here, we employ here. One of the things that you said, based on your entire experience, your entire career has been focused on these community banks, right? And a lot of our listeners are either partnering with them, buying from them, selling from them. And it's very different when you work with a community bank versus working with a Wells Fargo or JP Morgan Chase of Bank of America.
Mm.
So you have been on the other side. If when you start to partner with community banks, what are some of the things that these community banks look at when it comes to whether it's a partnership, vendor relationship? How do they buy? What is the thought process that goes through their head at that time? Because they don't have the budgets of JP Morgan and Bank of America
Right.
and Wells Fargo. So they are very conservative when it comes to that process. So can you talk to us about how they think about that a little bit?
That's a great question. And I talk to fintech entrepreneurs about this all the time. I said, understand the banker's pain points before you walk in the door. Do not try to sell them something they don't need. Understand their pain points. Well, John, what do you mean by that? I mean, the great thing about this industry, as from a vendor standpoint, the amount of financial data that's available on any bank in the country is is immeasurable, right? You can slice and dice it any way you want to, peer group analytics, et cetera. So what I tell folks all the time is understand the pain points of the banker before you walk in the door. What are their pain points typically? What are the core issues that bankers are focused on day in and day out? They're focused on non-interest income, net interest margin, right? They're focused on expenses. They're focused on deposits, especially now. They're hard pressed right now. Liquidity was not a problem 18 to 24 months ago. Now they're screaming for it. I mean, we invest our money here in short to medium term CDs, according to our investment policy. I was buying 6, 12 month CDs here for the association at 30, 40 basis points 18 months ago. Now we just did a placement at 425. Okay. So this is feeding into margin compression, right? Community banks make their money on the spread. We're not big drivers of non-interest income, although we need to be. So as a technology company, pull up the bank's financials, understand how they stack up next to peer. Think about it think about your solution in terms of what pain points does your solution solve? How does your solution help them address those core issues? The NIM, non-interest income, the efficiency ratio, which is the cost of doing business, deposit gathering, asset concentration, etc. Walk in and have that story ready to go, right? And right then and there, the banker will know that you did your research. You're not there to sell them something. You're there to be a solution provider to a pain point, and that'll build that relationship immediately. That's the one. After you walk in, you talk about golf, family, and the weather for 10 or 15 minutes. You better get into the business conversation, right? And so that's what I tell people all the time. And it's I think it's hard for some technology companies to understand that, right? And so invest the time and find the data analytics that are available and do that research. So you put it in terms of their language. They'll if you can show them a return on investment and how something's going to, if your solution is going to drive the efficiency ratio down from 68% to 64%, they can ROI that in their mind as they're sitting there as you're talking to them, right? They'll make the value decision. So that's the best advice I like to give fintech companies when preparing to speak, and they will. They're more. They're all banks and financial services companies, I think, are slow to make decisions. Not necessarily a bad thing, but I think a community bank can make a decision a little bit faster than some of the large ones because there's multi layers of authority you need to go through.
So you said non-interest income, right? A few years ago, obviously, interest rates were near zero, and maybe there was a bigger focus on non-interest income because how do we make money? Now that interest rates are higher, and they probably are going higher, is that shifting a little bit, and is the focus coming back to actually have an opportunity to make money off of interest today, or is it staying pretty much the same?
No, that's a great question. There's a gap, and what I mean by that, when banks have money in time deposits. 6-month, 12-month CDs, right? So, if you're paying a 6-month CD at 200 basis points, right, and the Fed just did a 50 basis point bump, right? So now, if all your loans are, let's say most of your loans are based on prime, right? Prime a year plus ago was 350 basis points. Now it's 75. Okay, went up pretty quick. But guess what? When that timing difference ends, you're going to have to start paying up for those deposits. So there's a gap here to start, right? And maybe you get a little bit of a break, an additional spread when the rate goes up because you can reset because you're set on prime. So prime goes up, you can reset. So, but your cost of funds stay down here. But guess what? Your cost of funds are going to come up very quickly when the time deposit comes due. So it's a timing difference. It's not a permanent difference. So they enjoy the gap when they can get it. But as I'm going around, that gap is tightening once again. So they're having to pay up for the liquidity now, and also too, right? I mean, it's a competitive market, right? Some banks will be a little bit more aggressive, especially in the Atlanta metro area, right, on interest rates than others. So you see spreads a little bit tighter in the Atlanta metro area than what you would in some of the more rural markets in which maybe they have there's not as much competition. The big banks aren't really down in some of our more rural markets. Credit unions, which are tax advantaged. I mean, credit unions do not pay, so they already kind of get a little bit. They kind of get a really big break as well. 21 on the federal level, and another 6 or 7 on the state, so near 30 basis points pricing advantage. But they're more focused on retail, right?
Yep.
And a lot of our banks are, most of our banks are more heavily focused on CNI and CRE lens, yeah, and ag. So
Gotcha. So one of the things I've been hearing a lot at events of CBA, ICBA, I've heard Charles Potts speak about this as well, is it's time for community banks to fight back, right? Whether it is with the larger banks, whether it's the fintechs. How do you see that happening? Like, what can or what should community banks be doing to kind of keep that business local and offer that fight back, right? David versus Goliath. What can the banks do, or what are the banks doing today?
I think the competition from the big banks is primarily with regard to deposit gathering,
Mhm.
right? The big banks are in your more rural markets, not to necessarily make small business loans, but to gather deposits. Okay, and so they can typically pay a little bit. I mean, if Wells Fargo wants um, a municipal deposit placement of 30-40 million dollars, and they're competing against a community bank, they can pretty much price it any way they want to get it, right? And so it's really what our bankers have to do a good job of impressing upon, in particular their municipal depositors, is the benefit of keeping that money local. Community bank will take in 10, 15, 20, $30 million of deposits, and then lend that out in the local community because that's what their market is. And if their average loan to deposit ratio is 80, now almost 82, 83%, you take in $10 million of deposits, that's $8 million of new loans in those
Mhm.
communities. So Wells Fargo is not going to make, I don't want to keep using their name. They do a lot of good things. They're a good bank. But the big banks typically are going to take those deposits, right? And they're not doing it. That's what we do. I mean, PPP proved that to be the case. I mean, we,
Absolutely.
we, we did, 2/3 plus of all the PPP loans in the state and across the country because that's who we are. So try to tell that story with your local municipalities. On the fintech side, I'm not sure if it's a pushback or a fight back. I think we're through that now. I really do. I think when you start fintech was a scary word maybe a couple 3 years ago because the banks felt like, oh my God, they're gonna put us out of business. And I think what a lot of the fintech companies found is it's a pretty regulated business, right? And it's complex, and there's a lot of cost associated with regulation that we didn't necessarily build into our model, right?
Mhm.
So then it kind of shifted to, well, how can we partner with community banks and banks in general?
Yep.
And I think that's where it's at now. So banks are looking at technology partners again to enhance the customer delivery channel, to drive down their efficiency ratio, to increase the number of loans, increase non-interest income, all of those things. And so I think that's enhance their cybersecurity monitoring, right? So that's how I think banks are looking at fintech companies today versus, oh my God, they're coming to put us out of business, right? So
Yeah, absolutely. That's actually a good segue into my next question. So you said 2 to 3 years ago, fintech was a scary word. I feel like today in the banking world, chat GPT and AI is a little bit of a scary word. So how are these banks thinking about AI, where we are headed, especially with chat GPT? Are there talks around that, and what banks can, could, should be worried about?
no, I really, going around the state talking to bankers, I don't think we're there yet. So it might be another 6, 12 months, before that becomes a little bit more pervasive in the conversation. But I don't think we're really there yet. I think they're still trying to get their hands on fintech, reg tech, ag tech. Ag tech, especially in Georgia, is becoming more of an important aspect for our ag lending institutions to look at. So I don't think we're there yet on those other components.
Gotcha. So, what is the current fear, if I may, right? What are banks today, if you ask them, are scared of?
Well, geez, there's so many issues that they are dealing with. Increased regulation, right? There's a provision of the Dodd-Frank Act that has yet to be implemented, 1071 reporting, which is essentially, I've described it as HMDA reporting for small business loans, and that adds another layer of reporting and complexity, and it'll be another investment banks will have to make, right? And I think that is coming. So there's concern around that. The talent gap, you talked a little bit about the FinTech Academy, huge, so we've made it a point to form partnerships with the four major FinTech organizations in Atlanta. And I think the Georgia FinTech Academy is extremely important because number one, we're talent starved. Number two, we're technology talent starved, right? So
Absolutely.
if we can incorporate some of these soon-to-be college graduates into our community-based institutions through internship programs to start, and then hopefully as FTEs down the road, that's a really good thing. So that relationship we have with the FinTech Academy is really, really important to us. So talent in general is tough. It's a very tight labor market across the board. Uh, Deposit gathering, as I mentioned, is front and center. I had a bank appointment early this morning, and they're at this particular bank was at 94, 95% loan to deposit ratio, and they're running pretty hot, right? So they need to get some liquidity in the door to keep up with their loan demand. And I think they're starting to hear some undercurrent about as these loans, as I mentioned, as loans do reset, the higher rates. I mean, if you had a 3 to 5 year balloon, right, that's going to reset, and when you took out that loan a couple of years ago, again, maybe prime was 200 basis points. Now it's going to reset to 70, 75 plus, whatever. That's a pretty big gap, right? And
Mhm.
so bankers are starting to talk about, geez, what happens then? Do our customers going to have the equity to put back in the deal to get the loan to deposit ratios right? Little problem there. So, or
Mhm.
potential little problem there for non-performing, the potential for non-performing assets. So, starting to hear some of that. That makes us a little bit nervous. Are we going to have a recession? Are we not going to have a recession? Jerome Powell again today testified in front of the Senate and said, "Hey, we're not done yet. We're not done yet." And I think the market was thinking, with the last rate increase, they're slowing down, inflation's slowing down. But he's kind of saying, "Look, I didn't tell you we're backing off yet." And you see what the stock market's doing today as a result. So those are some of the things that they're thinking about day in and day out that they're concerned about.
Interesting. So let's switch gears a little bit and talk about payments, right? So it kind of falls into that non-interest income and depends upon how you look at it. What are community banks doing in the payment space?
Yeah, I mean, honestly, they're looking at all different options to enhance the payment. Again, improve. I look at it as improving the customer experience, right? So they're looking at anything and everything under the sun for payments. I tell you, from a legislative standpoint, we were just able to build a coalition and push back on a bill that was essentially a Durbin-like bill for credit card
Mm-hmm.
interchange here in Georgia. Georgia was one of a handful of states that the retail lobby targeted to implement a Durbin-like bill for credit card interchange since it failed on a federal level. So that would have had a major impact on all banks and actually all payments companies. And so we have payments companies in our membership as associate members, and so we took on that fight to not only represent our banks, but to partnering with the global payment system, et cetera, to testify and push back on that legislation. So, a lot of folks are coming after the retailers or the merchants, they're coming after that interchange revenue. It's important to protect that because it is a cost of doing business. I think what people forget is that if there's a fraud, right, and banks, and there has to be a card reissue, the banks absorb the cost of the card reissue, and there's a real hard expense with that, right? So we're providing a service. The payments network is providing a service. There has to be compensation for that. So And the retailers, they get a benefit. They're getting their money faster and more cleanly. I mean, we certainly don't want to go back to the days where we're writing checks in grocery stores, right? And then,
Yep.
I remember, I'm so old, I remember growing up that, you'd walk up to pay for groceries, and there was a list of people that you couldn't, the person at the register couldn't accept their checks anymore. Well, the
Mm-hmm.
payment system is basically taken that away. So, that's something that we're monitoring very closely along with ICBA, and I know all the payments organizations. But yeah, again, anything that can make that process, Fed now is coming. I mean, we're really excited about that, to have a kind of an independent, if you will, service,
Yep.
as opposed to, again, relying on the big banks
Yep.
for that work. So we're really excited about that.
So that's great. I mean, we learned about, how banks think, how banks partner. If somebody wants to work with them, what is the advice you would give a founder today who's maybe starting a bank, or because we spoke to somebody like just yesterday who was saying, "Oh, I'm about to start a new bank," right? I was like, "That's interesting," right? There is so many banking institutions out there, but everybody thinks that there is something different they can do. So if they're starting a bank or they're starting a fintech, what is advice that you would give them in today's environment, which certainly is way different than what we would have all said 2 years ago?
Yeah, I mean, I don't want this to sound self-serving, but get involved. If you're in Georgia, get involved with us, right? I mean, we are plugged into 140 community-based institutions across the state. We have connections nationwide with ICBA. We're plugged into our Department of Banking and Finance. And when we do programs, we often bring in someone from Department of Banking and Finance to help educate our burgeoning technology companies in terms of what they're looking at from a regulatory standpoint. I think that's eye opening. As we did a program with ATDC, and we brought in Kevin Hagler from Department of Banking and Finance, and he was the most popular guy at the cocktail hour. All the entrepreneurs wanted to speak with him and just say, "Well, help me clarify this, help me clarify that." So you've been to our convention, come to our, you get plugged into the ecosystem here. You begin developing a network, right, of other partner of other companies in different arenas, right? You meet a whole bunch of different bankers. You attend educational programming so you can learn about the complexities of this industry. So, I see us as a great resource in that journey. Get plugged into ICBA on a federal level as well. They are bringing their accelerator program to the Atlanta area. I am super excited about that. They're going to really plug into the ecosystem well here and further enhance it with the resources they bring to the table. So get plugged into that. Meet people, participate in organizations, like FinTech Atlanta, Technology Association of Georgia, ATDC, speak, go to the Georgia FinTech Academy, get plugged into those organizations as well. So the ecosystem is here, right? Which is what we're so juiced up about, right? So take advantage of that network and get your name out there, get your idea out, and ask questions about whether or not your solution addresses pain points. Do your research on that, and sometimes it will, sometimes it won't, and then if it doesn't, obviously refine or revisit. So that's kind of the best advice I think I could give.
Absolutely. And so if people wanted to get in touch with you, John, how would they do that and where would they find you?
Yeah, I'm pretty active on LinkedIn, as you know. My email is john at cbaofga.com. cbaofga.com is the website. So we're pretty easy to find. So
Yeah. I
um,
was going to say, if anybody wants to send gift cards, that's the email address to send it to. I'm just kidding. So
absolutely.
I really appreciate your time today. And this was a very fun conversation. I learned a lot, and I have been in this space for a while. So I'm pretty sure that our listeners are going to learn a lot. Thank you again for spending the time with us. Thank you for the amazing work you do here locally, not only with the banks, but also with the community, helping grow the community, creating that ecosystem, like you said, plugging into all of these opportunities, because that is what makes us strong. And
Mm,
that's what really community banking is about. It's not
mm.
about, fighting with each other. It's about being a strong community and supporting each other. So thank you again so much for attending this podcast with me, and all the best for your future projects.
Well, it's a pleasure. Thank you for your support and friendship. We appreciate working with you all.